makers are finding it difficult to provide liquidity, which is a worrying sign for investors who want to bet on Bitcoin's future. In this section, we will discuss the implications of Bitcoin's declining liquidity and the potential impact on the cryptocurrency market. Slippage has increased, leading to more price swings. The collapse of Silvergate Capital and Signature Bank exacerbates the lack of liquidity. Market makers are facing difficulties providing liquidity. Lower liquidity typically leads to more volatile markets, especially in crypto. The declining liquidity of Bitcoin has already led to an increase in slippage, which refers to the change in price between the placement and execution of a trade. This means that buyers are receiving a worse deal than before, as the average price for each Bitcoin has decreased. The collapse of Silvergate Capital and Signature Bank, which were used by market makers to transact with exchanges, has only worsened the liquidity crisis. Lower liquidity typically leads to more volatile markets, particularly in the crypto industry, which can cause wild price swings. In short, the lack of liquidity is a significant concern for investors and market participants alike. Binance's end of zero-fee trading has affected market makers' ability to charge higher fees. Liquidity for Bitcoin Tether pair on Binance has dropped 70% since the announcement, while trading volumes have fallen 90%, according to Tyco data. Lack of liquidity and market volatility. YouTube monologue. This section only, no extra fluff, part of a longer video too. Binance's recent decision to end zero-fee trading has had a significant impact on market makers' ability to charge higher fees. This has further worsened the liquidity crisis that Bitcoin is currently facing. Liquidity for the Bitcoin Tether pair on Binance has dropped by 70%, while trading volumes have fallen by 90%, according to data provider Tyco. These changes are particularly concerning as Binance is currently the most liquid crypto exchange in the world. The reduction in liquidity due to Binance's fee changes only adds to the already declining liquidity of Bitcoin, which could lead to more volatile markets in the future. Investors should be cautious in light of these developments, as the lack of liquidity is a serious issue that can trigger wild price swings. Liquidity is likely to get worse until replacements emerge. Viral YouTube monologue, no extra fluff, part of a longer video. While the current lack of liquidity is a cause for concern, market participants believe that new contenders will gradually emerge to perform the network functions of Silvergate and Signature Bank. However, complete replacements are unlikely to appear overnight, which means that the liquidity crisis is likely to persist for some time. As a result, liquidity may continue to decline in the short term until replacements emerge. Investors should keep this in mind when considering their investments in Bitcoin or other cryptocurrencies, as the lack of liquidity can lead to wild price swings and increased market volatility. Despite Bitcoin's recent price rally, some investors are still trading cautiously due to the banking crises and rising interest rates. The recent failures of banks such as Silicon Valley Bank and the collapse of Silvergate Capital and Signature Bank have created uncertainty in the market, making investors more cautious about investing in cryptocurrencies. Additionally, the recent rise in interest rates could also have an impact on the market, as higher rates could lead to decreased demand for riskier investments like Bitcoin. In conclusion, Bitcoin's recent price surge is not necessarily a reflection of its declining liquidity. such as Silicon Valley Bank, as well as the recent changes to Binance's fee structure, have further exacerbated the liquidity crisis. Market participants expect new contenders to gradually emerge to fill the void left by these failed banks, but complete replacements are unlikely to appear overnight. Investors should proceed with caution and be aware of the potential risks associated with investing in Bitcoin or any other cryptocurrency. It's essential to do your due diligence and invest only what you can afford to lose.